Happy Sunday, happy Sunday. Couple of hours before my live masterclass on funding. What I want to talk to you guys today about, what we're going to talk about is how to prepare for funding. This is going to be basically how you want to build out your foundation so that you know you're in position for funding. This includes things such as improving your cash flow. There are three things that allow you to get capital and funding. One, of course, we know is your credit, personal credit. I get this question a lot. There are a lot of business owners who don't want to use their personal credit to scale their business. But what happens with that, they hit a roadblock because there aren't a lot of opportunities for cash infusion that doesn't require your personal credit. Even when you're going for MCA or real estate loans, they may say, "Oh, you could do this without credit," but they're lying. They're still going to check your credit. They're going to do a soft pull. May not be a hard pull, but they're going to do a soft pull. And a lot of these products still want you to have at least like a 640 or 660. Okay. If this is your first time joining the channel, my name is Jamal, the Credit Protector. I help small business owners get access to capital, and I help individuals improve their credit so that they can get access to capital so that they can grow and scale their businesses. So let's talk about getting everything you want to do to make sure you're in position for funding. And these have come from different conversations I had with different clients and potential clients, things of that nature. So let's talk about first things first. We want to be in a position where we're using the capital to grow what we already have going on. I've actually spoken to a lot of business owners and individuals who, don't have any income, things of that nature, and they're using funding to supplement their income. The issue with that is they're doing it once they're maxed out. Part of the pre-game work for funding is ensuring that your personal credit is in good order. Part of that is ensuring that your credit cards are not showing that you are maxed out. With your credit card usage and utilization, you want that to show 30% or less to get maximum funding. If your utilization is over 30%, I would say anywhere from 30 to 45%, you can still get some funding, but you're not going to get the type of credit limits that you see online. You see, get 100,000, get 50,000, get 75,000, get 60,000. Those credit limits are reserved for those who don't really need the money. Banks lend to people who do not need the money. Okay. Banks they're a business. They're for profit. They're not here to save you. They're not. They're here to make money off of you. So if they see that we're high risk and that we have high utilization on our credit cards, they're not going to lend us money. So before we think about any funding round, we want to make sure that our credit card usage and credit card utilization is below 30%. Is a recession, people are getting laid off. What can you do to ensure that your credit cards stay below 30%? If you ever read the book Richest Man in Babylon, he has a formula where he says we live off of 70%, we save 10%, and then 20% goes towards our debts. Now, I'm like, well, damn, how are you going to do that? Even thinking about it for myself, you have to increase your ability to earn. So whatever you're doing right now, even if it's a full-time job, go online right now, YouTube, you can type in ways to make money online 2024. There are hundreds of different ways to make money online. There are 100 different ways to just make money. You have to choose what's going to be best for you. If you're already a teacher, that means you're able to tutor on the side. If you're a college student who does really well on tests, you can start a test preparation company and charge people, or you can tutor other students. If you love cars, you can work at an auto body shop or a mechanic shop, right? Or you could just give out, general advice to help people buy their cars, things of that nature. You can buy and flip cars. There are so many ways. If you feel like you don't really have any skills, but you have a car, we got all the apps. What do we got? DoorDash, Uber, Instacart, Shopped, all of those apps that you can download. There's another app where if you have a truck, they have like gig work for people with pickup trucks where you just pick up stuff and you're hauling it, right? Trash removal, junk removal. And junk removal is pretty freaking it's very lucrative. I know people that do junk removal and it's like they make $1,000 a day, right? Because they charge anywhere from $200 to $300 a house, and they do like 5, 6 houses a day, killing the game, killing it. Any of these are opportunities that you can use to increase your income so you can start implementing the strategy of only living off of 70% of your money. We have to work on the income. Applying and going for funding when you have zero income is the worst time, because a lot of business funding will also ask you about your revenue. Some will ask for proof of revenue, especially if your personal credit isn't up to par. I've worked with clients who had good credit. They were over the 720s, but their credit cards were still maxed out, even though they were in the sevens. They had high utilization. They ran into walls. They weren't able to get the funding amount that they wanted. We got them like $11,000, right? It was some, but it wasn't enough. So they're artists, and I say, hey, let's talk about what we can do to increase your income so that we can kill off some of this debt, get you at least to 30%, maybe even 31%, so we can get you some more approvals. Part of the pregame work is understanding where you are and where you want to go. I can't stress that enough. The next thing is knowing and looking at the available credit that you have. This is different than the credit card utilization. When you're going for funding, when you're building out your credit report, along with you want to have, I would say, at least 4 years of credit age on your credit report. I'm seeing right now, if you have 2 or 3 years of credit, you're still getting denied. Or they're hitting you with a super low limit, like 500, 200, maybe $1,000, maybe. And it's understandable that everyone has to start somewhere, especially if you're in the rebuilding phases. You just got out of bankruptcy. Maybe you just cleaned up all of your credit. So you're rebuilding. It's totally normal to start off with low limits. Just understand you're not in position to go for funding yet. We have more work to do. If you're just building and the largest credit limit you have is, let's say, $2,000, you still need to wait. I know you want to get to the bag right now. You still need to wait, because what I'm seeing is even when you have like let's say, even when you add on authorized users, the banks now, they can see what credit cards are authorized user. They see it. So if the rest of your profile isn't old enough, you'll still get denied. Actually, someone in a group I'm in, they had 5 accounts. Their primary accounts, meaning the accounts in their name, were all under 6 months old. Then they had 5 authorized users. The 5 authorized users were, they were substantial. They were 5, 10, 15 years old. Their average age on their credit report was like 3.5 years old. Their credit score, it was great. It was like a 742. Amazing. But in this credit crunch right now, that's where that's what it's called, a credit crunch, a recession, the banks are looking for any reason to deny you, which means if your credit is not absolutely perfect, you'll get a denial. This person, even after doing all that work, they purchased the trade lines. They got up to a 740. The banks was like, nah, because we can see that you added on all of these trade lines to boost up your credit. We're not rocking with that. We're not rocking with it at all. We can, because we can see that your actual credit, the accounts that are in your name, are only 4 months old. That's not enough time with credit for us to be comfortable with you, especially not for us to give you $10,000 and the biggest line of credit you have is $2,000 and you only had that credit line for 3 months. We want to start thinking like the bank. We have to start thinking like the bank. We can't simply think about what we want. It's very much so like negotiation. If you ever negotiated, you have to think about, okay, what does this person want that I'm negotiating with? And how can I give them some of what they want while also getting some of what I want? The banks are like, look, we know you want some money, but we don't feel comfortable giving you the money because your age not there. Let your credit age. If you're rebuilding, you're going to have to wait. You're going to have to let those accounts season for 6 to 12 months. That's just the real. That's just the. Sorry, the mic died. So you gotta let your accounts age for 6 to 12 months. Whether you just turned 18, whether you have well, let me back up. If you're 18, you just turned 18. It's a lot easier to get credit. You can start off with just like the Apple card, the Chase Rise card, and go even straight into platinum cards. It authorized users are also okay if it's your family members. This works fine if you are 18, you're just starting. You can get some AUs because the credit card companies understand that your parents are going to add you to their credit. So it makes total sense for them to add you on to give you that boost. So that's cool. But if you're not 18 and you're in your 30s or 20s and you're rebuilding your credit, you don't get that leeway. You have to let your account season and age. And while your accounts are seasoned and aging, what you want to do is use those cards as much as possible, as often as possible, and pay them off frequently. What this will do is give you credit limit increases, automatic credit limit increases from each of your credit cards. I would say even use every single credit card daily or at least weekly, and then pay it off as soon as you use it. You do not have to wait until the due date to pay off a credit card. You can pay that joint off as soon as you use it. Most credit cards, some of the crappy ones like Open Sky, sometimes even Capital One, they may like freeze your account if you pay off the card too much. But most good credit card companies, you can pay on your credit card every single day. Amex in particular, they love to see you paying off your credit card on a regular basis. They absolutely love to see that. Appreciate you, Riley. What's going on with you, man? You good? So, along with letting your accounts age for 6 to 12 months, ask for credit limit increases every 3 to 6 months. Every 3 to 6 months, ask for a credit limit increase. I say 3 to 6 months because every bank is different. There is no one size fit all. There is no absolute answer to the individual banks. What we're talking about today is the foundation. If you have this foundational stuff together, then it's simply a matter of learning what bank pulls which credit bureau, what are those banks' particular um, lending limits, what are their credit card reallocation rules, can you double dip, right? That's when you can get into the deeper methodology of going for funding. But right now, if you are kind of in the struggle, if you're trying to figure it out, let's build this foundation. Let's make sure you have at least 5 accounts on your credit report. At least five. At least five. All right. Two of those five need. Sorry, my mic's died. Oh, maybe it didn't. Hold on. You got Credit Strong that can help you with that. The Navy Federal Pledge Loan play. All right, so you got credit. All right, my bad. The mic went out. So when it comes to getting these $10,000 primary lines, you got Credit Strong that can help you get a $10,000 primary trade line. You have Navy Federal. They have the pledge loan play. If you can't get into Navy Federal, there are other credit unions that have pledge loans. Just about every credit union has a credit building product. They may call it a credit building loan. It may be called a quick loan, or it's just outright a pledge loan. DCU I know has one. Unify has one. Um, I think it's Humanity Credit Union has one. All of these have different credit building accounts that you can use to build up your credit before you go for funding. Okay. If you got to start off with credit building accounts like Kickoff and stuff like that, there's nothing wrong with that. Those accounts are meant to build from. You're only supposed to have those for 6 to 12 months. And as you have those, you're going to transition over to better credit cards. You're going to transition over to Discover, Capital One Quicksilver, the Chase Rise card, the Chase Freedom card, the American Express Everyday card, your the Bank of America Advanced Cash card, the your Navy Federal Cash Rewards card. These are the next level in the credit cards that get you into the more prime type of credit. All of this is building you out so that you can be ready for business funding. When we're talking about actual business funding, I know I said 5 accounts. I'm going to edit that 10 accounts. You want your profile to be thick, meaning you want to have at least 10 accounts, a personal loan on there, some credit cards. I would say at least 5 credit cards. If you have student loans are cool. People don't like student loans because um, it's just debt that shows up. But student loans are good because it gives you the history. Most of us, our oldest account on our credit are our student loans. I know mine are, right? So there's nothing wrong with a student loan. Now, when we're talking about debt to income ratio, okay, it may play a role. But when it comes to having that length of time on your credit report, there's nothing, student loans are great for that. I've removed student loans from people's credit and their score tanked. I've One time I did it too well and her score went to zero because most of what was on her credit report were student loans. So she wanted to get rid of them or what have you. We did, and then she went to nothing. So So with that, right, keep that in mind. And so once she goes to zero, now she had to go through the process of rebuilding. The other thing we want to make sure on the business when we're talking about business funding is get your cash flow up. You got to show revenue. If you have weak personal credit, the next thing you're going to need is either collateral or you're going to have you're going to need collateral or you're going to need cash flow. Okay? There's something called revenue-based lending. What revenue-based lending is exactly what it sounds like. Based on the revenue that's coming into your business, you can get a loan based on that revenue. There are companies that will lend you 80 to 100% of the amount of money that your business generates. Now, on the traditional side, if we're talking about going into the bank, hold on, what you say, Riley? 22 with a 740. Shout out to you. Only 2 credit card limit. Will it affect my score to keep getting more accounts? We don't need with that. Don't even so. If you notice, I haven't really said anything about the score. I haven't said anything about the score. I'm talking about because it's not even about the score. Remember, I was saying there's. Well, maybe you weren't here. I'll give you this example. There's a in a group, someone posted that they had 10 accounts, right? They had a 740 credit score like yours, but all of their primary accounts were new accounts. Their accounts were all less than 6 months old, and then they had another 5 accounts that were all authorized users. Their average age was about 3 years. They kept getting denied, even though on paper, even though on paper it sounded good, but in reality, that credit score wasn't enough because they looked at the profile. They saw that all the accounts he had in his name were too young. They were way too young, right? They were 3, 4 months old. That's not strong enough to go for business credit. Now we're talking about on the personal side. Yeah, you can go get some more personal credit cards. You can grab, any of the cards that are already mentioned. That's fine. But when we're talking about business funding, you're going to need a much stronger account. Okay. So you're going to need, when it comes to business funding, you're going to want to show at least 10 accounts. With those 10 accounts, you're going to want to have at least 2 accounts with a $10,000 credit limit, right? Yeah, that's exactly what I just said. Yep. At least 10 accounts, at least 10 accounts. And at least two of those accounts, you want to have at least a $10,000 credit limit. That will help you get into position. All right. Definitely help you get into position so that you can actually go for more funding. Right now, with 2 accounts, $3,000, just have to keep building that over the next year. You definitely just have to keep building that over the next year, right? The other thing we want to look at is the number of inquiries that you have. With the inquiries, you definitely want to make sure you have less than 4 inquiries on your credit report. Especially when we're talking about going for zero interest funding, you don't want to have a lot of inquiries because the banks don't like to see a lot of inquiries. Okay, four or less. Four or less. If we're talking about Chase is there are certain banks that are inquiry sensitive. Chase is inquiry sensitive. US Bank is inquiry sensitive. PNC Bank is inquiry sensitive. So when you're thinking about putting together a funding spree, you want to make sure that your inquiries stay low. Now, you can always apply on the business side, wipe off those inquiries, and then keep it moving, right? So make sure your inquiries are low. That's part of the pre-funding game. The other thing is you want to make sure that you don't have, the other thing you want to make sure is that you don't have any negatives on your credit report. No recent negatives. I would say even as far back as 3 years. You want the last 3 years of your credit report to look as clean as possible. That means no late payments. That means no collections. That means no derogatory, no charge-offs, right? I would say within at least the last 3 years, especially now because the banks are getting more and more strict. I had a client who went for some funding before they spoke to me, and they actually got denied because of late payments that were from 4 years ago. Okay, so it's very, very, very important to make sure your credit report stays clean of all negatives. Now, if you have one or two negatives, what you can do, I actually made a video on how to delete. I already made a video on how to delete and reverse late payments. You guys can check that out on my page. I made a video on how to lower your utilization. You can check that on my page. I also made another video on just recently how to delete collections if you have them in 2024. Now, I have a team that does credit repair, but that's not my primary focus. We just understand that your credit has to be in position so that we can help you get some funding, because all of this is lost if you have those negatives on your credit report. You want to keep your credit report as clean as possible. All right. So we're going to go through it again one more time. So you know whether or not you're ready for funding. And this is business funding. This isn't simply just applying for personal credit cards. It's a lot easier to get personal credit cards than it is to get business funding. So on the personal side, this is what your personal credit report needs to look like for business funding. 10 positive accounts. 10. No negatives within at least the past 3 years. At least. That means no lates, no charge offs, no collections, no repos, no bankruptcies. At least. The other thing we need, the other thing that you want to make sure of is that out of those 10, at least 8 of those accounts are your accounts. If you use an authorized user, cool, but authorized users come on last. The next part, your age. Your age needs to be at least 4 years. I'm seeing people getting denied with 3 years worth of credit age. Okay. I would say 4 years to be on the safe side. You can get that between a combination of having primary accounts that are at least 12 months old and then including a authorized user. Your primary accounts, I just going back to that, the age of your primaries, I would say at least 12 months old. At least 12 months old. You can continue to build up your personal accounts. You can continue to get credit limit increases on the personal accounts for that first 6 to 12 months before you transition over to the business side. But you want to make sure you're building it out properly so that when it's time to go for funding, you can hit the road running. All right. Um, Now, so that's what your personal credit report needs to look like. Oh, also make sure your inquiries, four or less, 4 or less inquiries. You want to get those wiped out and removed. I also already have a video on how to remove hard inquiries. So everything I'm telling you guys in the pre-funding framework, I've already given you the blueprint on how to fix and correct all of those things. If you're not sure of how to get a $10,000 limit, you can use the pledge loan play. That's from Navy Federal, DCU. There are a lot of credit unions that offer things similar to the pledge loan. You also have Credit Strong. They offer a $10,000 loan and trade line that can populate onto your personal credit. All right. Now, with the business, of course, you can do funding as a sole proprietor, And that's totally fine as long as you have a business name and your personal credit is built out properly, like we just spoke about. I also suggest getting an LLC because then you can double dip. You can get funding as a sole prop and you can get funding as a LLC, which basically doubles your borrowing power. So you want to make sure you got an EIN. You want to make sure that you're registered in the state that you plan to do business in. Some people, for different tax and protections or tax reasons, they'll form their business in Nevada, Wyoming, Pennsylvania, Delaware, what have you, Florida, and then they'll foreign file in the different states that they want to get funding from and do business in. And that's fine if you want to do that. That's totally fine. But make sure that your LLC is structured properly. Make sure you have a business bank account where banks can see the funds going into your business bank account. The banks actually have an internal rating system that judges your account based on how much money goes in and out of it. 10,000 is when you start to hit the sweet spot. That's when they start to give you a low 5 or really low 4 rating, high 4 rating, right? The more money they see going into that bank account, the happier they are, the more comfortable they are with lending to you, and the more products they will offer you. This is one of the benefits of doing what we call relationship banking. Whereas instead of simply filling out an application online and hoping for the best, you can actually start data mining with the company, building a relationship with them, showing them that your business is cash flowing, and then asking for money. This is how when you see people with, getting approved for 50, 60, $70,000, that's how they're doing that. They're not doing it straight out the gate, no relationship whatsoever, getting a $50,000 credit card. That's just not what it is. If you're going for those bigger lines, you're going to want to do it through a relationship. If you don't have a direct relationship, that's fine. You can always make one. Open up the business checking, open up a personal checking, open up a business savings, open up a personal savings. Put money into those accounts for the next 3 months. While you're doing that, getting good with the staff, getting good with the banker that works there. Have conversations with them. Ask them questions about the different type of lending opportunities that they have. Right? There's nothing wrong. It's totally fine to do that. Now, if you're like, oh, I don't have 3 months to wait, that's fine. You can still go in, still meet in person, make a nice hefty deposit, $5,000 or more into the account, and then talk to the business relationship manager about what opportunities are there for you. All of that is part of the pre-funding framework so that you can get access to 40, 50,000, 100,000. There are banks that have $100,000 loans that don't require documentation. Those type of loans only come and only are given to those that have a relationship with the bank where they can see your cash flow because they monitor it, right? If you're showing that you're producing, $10,000 to $20,000 a month, and then you go for one of their products, whether it's a business line of credit, a credit card, or a loan, yeah, that's how you can qualify for $100,000 loan. Most banks are going to give you anywhere from 10 to 30% of your business revenue. So when you see someone saying, oh, I got a $50,000 credit card, if they're doing 10% of your annual revenue, that means your business is doing, or they said their business is doing about 500,000 a year. What if your business isn't doing that much? That's fine. You can still get approved. You can still get the funding. It just may not be a $50,000 credit card. And there's nothing wrong with that. I helped, even if you get 15,000 but you get 15,000 from 4 banks. That's $60,000. You can probably do a lot with $60,000 for your business, especially at 0% interest. So pre-game work, we want to make sure the personal credit, just to run it back for those that's just signing in, you want to make sure your personal credit is straight. With your personal credit, if you wanted to run a funding sequence as a sole proprietor, you can do that. Have only 4 or less hard inquiries, no derogatories on your credit report whatsoever for the last, I would say, at least the last 3 years. At least the last 3 years needs to be quick, squeaky clean. If it's not, then work with a credit repair specialist, get that information reversed and or deleted. I have a team that does it. You can definitely work with me and my team. You can click the link. We have it right there. Or you can watch my videos where I've guided you through how to clean your credit yourself. All of that is available right here on YouTube. You guys can definitely go check that out. Clean that. This is specifically for business credit. Have 10 strong primary trade lines. When I say strong, you need to have trade lines that are over $10,000 or more, because business, when you're doing business credit, they will match and exceed the credit limits that you already have on the personal side. So if you only have a $2,000 or $3,000 credit limit on the personal side, you're not ready for business funding yet. You're just not ready for it. They may give you, 5 or 6, maybe 7,000 on the business side. But if you're really trying to grow and scale a real business, that's not going to be enough for you in most instances, right? I did inquiries. We did make sure everything is clean. We did age. We did your credit limits. That's it on the personal side. On the business side, make sure that your business is registered with the state that you want to do business in. You have your LLC, you have your articles of organization, you have your EIN, you have your business bank account. Okay. You need all 3 of those things. And of course, you need a payment processor, because you got to have a way for people to get to pay you. And I would say have at least 3 different payment processors, just in case one for some reason freezes, or they freeze up or something. Weird things happen. So have 2 or 3 different ways to accept payments, right? If you're starting off, it could just be Cash, Zelle, Cash App, PayPal, Square, Stripe, Authorize.net, 5 Star Processing. There are a lot of payment processors out there. Gumroad, if you're selling digital products, Gumroad allows you to post the digital products, and then they take a 10% commission from each product every time you sell a product, right? So any of those act as payment processors. And then from there, all that money is going to go into your business bank account, which is going to make the business look healthy to the banks. This has been the pre-funding framework and game plan. These are the things you guys want to make sure you have in place before you go for business funding, to limit and reduce any unnecessary denials and any of the low limits. Okay, so hopefully this was helpful to everybody. In the meantime, in between time, I'll talk to you guys later. Everyone have a great Sunday. Those that have registered for the masterclass, I'll see you tonight at 7. Everyone else, remember to like, subscribe, leave a comment when this video resurfaces, and I'll see you later. Peace.